Guys, welcome again to another session of the free class hosted by CA Trading Hub. And in this session, we'll be talking about inducement. So yeah, inducement. So I believe most of you must have been hearing the word inducement. But what does inducement actually mean? So inducement just means what? It's also a form of liquidity. And I will explain liquidity initially before. So you understand what liquidity is. So inducement is just what? Another form of liquidity. It's liquidity. It's a liquidity, but a liquidity used in what? In a particular context. Yeah, let me say in a particular context. So let me make it an analogy. So we see it over here. Let's say you have an option. Yeah. Now what do you want to see? Let's say you have something like this. No. Good. What are you seeing over there? The market must have been rejecting from what? A demand block over here for it to actually what? To actually give us an impulse move and what? And sponsor the next big of structure. And just like that again over here too. But what do you want to see over here? Notice something over here. What were these two lows? Where are they tagging and why are they not? Why are they not giving a good break of structure over here? This is what calls they are engagement. Yeah, they are engagement. So this is what? A double low inducement. It might be a single low too, like I said, liquidity might be in a single low, a double low, and whatever. So this is a double low as an inducement. What is it doing? It is actually engineering price to actually what? It is acting as a fuel for price. I said price moves towards wherever the next liquidity pool is right. And now the next liquidity pool at the market is what? Is this. So the fact that the next liquidity pool is this, price will actually was move into this liquidity pool. After moving into this liquidity pool, it will actually what? It will engineer it to move into this liquidity pool. And after clearing that liquidity pool, it will hit the demand block over here and what? And sponsor the what? So it will hit this liquidity pool and what? And sponsor the next upside. Yeah. It will sponsor what? The next upside. After now, it will hit this liquidity pool and what? This liquidity pool will serve what? As it will serve as a pool engineering price to actually what? Fueling price to actually come over there. Because price will actually want to come and clear the liquidity off over there. So after clearing it off, price will do what? Hit the demand block over here and what? And go up over here, continue the structure. Now, this liquidity pool is serving as what? It's serving as a fuel in price. For price to actually what? To actually come and fill this up. But without that is most of the one why is because of what? There's no inducement. There's no inducement. Because whenever there's inducement, price actually what? Inducement. Now, let me understand. Let me explain the concept to you over here. Having this inducement over here, what do you think is happening? Now, so having this inducement, what is happening here is that, sorry. So yeah. So having an inducement over here, what do you think is happening? I said liquidity is big players are what? They are filling their position with what? With opposite orders. Yeah, that is why I said whenever there's liquidity, right? So now sellers over here are filling their positions with what? Buyers over here. Now, big participants will actually what? Will actually be filled in afterwards after this particular liquidity is cleared over here. So now the fact that liquidity is over here, it gives big players opportunities to actually what? To actually step in place. And after stepping in place, price will actually what? They will actually want to step the market up. So because of that, liquidity is over here and there's a demand block over here. So the demand block is actually supposed to sponsor what? It's actually supposed to sponsor a bull move initially. But the fact that liquidity is over here, it gives opportunity for big players to actually what? To actually step in because their orders are being what? As in filled over here with this liquidity pocket over here. So that liquidity pockets filling their orders over here. That liquidity pocket fill their orders over here. Coupled with what? A demand block over here. It's actually what? It's actually make this kind of setup stronger than a setup where you don't what? You don't see any liquidity pockets before you what? Before you see a demand block. Before you see a demand block. What am I trying to say? Liquidity Inducement actually what? It actually makes a POI or another block or a what? A zone like this sit stronger. Make it stronger when you see what? When you see inducement before what? Before a block, before a on demand zone or a supply zone. So I hope you understand the analogy. The first analogy is what? It's false price to actually what? Come and create that liquidity. So by falling price to actually come to this low over here, price will actually automatically tag into this demand block and what? Sponsor the next upside because this is what? An uptrend initially. That's the first analogy. The second understanding you have to make over here is what? By what makes it stronger to what? To a setup where there is no inducement over here is because liquidity pockets are where big players step in because what? Or their the other side, the others will feed over there. The ones what they need liquidity pockets to actually what to actually fill their positions over. So by having liquidity over here, there is actually an opportunity for them to what to step into the market. So given an opportunity to step into the market, coupled with a demand block over here, a demand zone that is actually supposed to be over there, big play over here, coupled with this, it actually what makes this stronger to actually what to actually they expected to rise up the way it's expected to go compared to whenever there is what whenever there is no inducement. So whenever there is no inducement, just have another block. So big players don't actually have the opportunity to actually what they don't have the opportunity to step into that particular setup. So if they need to step into that particular setup and they are not in already, it might actually what it's actually it might tend to go slower or not what or not really go at all. So this is one of the ways what you pick a stronger setup than what than yeah, than when a setup is not really, really strong. So this is one of the ways. So it is actually crucial. It's actually cool to determine a setup that's what a very valid setup or not. So I'm not trying to say whenever you don't see an inducement before you see a demand or supply block, it won't actually move the way you expect. Yeah, it's moved the way you expect, but setups are what they are stronger than each other. You have a plus setup, you have just an ordinary setup and all that. By now you should must have had this a plus setup and everything like that. So now the for double low. But like I said, there are what liquidity is just liquidity. It doesn't have to what it doesn't have to be equal lows. It might be a single low, it might be 3 lows, anyhow it is. So let's just go ahead and find some examples about this. So it is always on your chart. It is always on your chart. And something about inducement you actually have to understand is this. It actually comes in two ways. And the most stronger one is this. It's a kind of ABC setup. So you must have heard of ABC, but let me just go straight into business. This is the first kind. You make a low over here. You see an inducement over here. It breaks the structure and comes after what to actually tag a demand block over here and goes the way you expect. So the demand block will actually be somewhere around there. So your demand block will be somewhere around there. This is what? This is your inducement low over here. And this is what? This is a break of structure over here. This is a good entry model, a perfect entry model. And this entry model is actually a very strong entry model. Yeah, this is a very strong entry model. So a break of structure and inducement, you see the market what? Clears inducement and what? And tags into what? The demand block and start going. So this is a kind of what? A kind of inducement. And another kind is this. Another form is this. Meets a low, clears, by now you should understand the concept of internal linked liquidities. So there will be internal linked liquidities around around all these, from this particular high to this particular low over here, the particular low that is formed over here. So there will be internal linked liquidities over here. So instead of what tagging and clearing this external linked liquidity as a break of structure, it won't. It will clear only internal linked liquidities and come somewhere around here after clearing that and what come back for an inducement over here for the inducement over for the inducement this particular low as inducement and what tag into a demand block over there and what and go for a break of structure. So you can see the difference. This break structure, this doesn't, but yeah, this is also valid as an inducement. This is also valid. Some traders tend to argue it, but it is also what it is also valid. So on your what you have the demand block over here. So you can use it in different ways. You just have to understand it. Understanding the chart is what is actually what makes you flexible whenever it comes to anything on the chart. So though I would recommend this. This first one over this. This is what? This is stronger than this. The first one is stronger than this, but depends on what? On what the market is giving you at the moment. Sometimes in some scenarios, this second setup, this second model is what? Might come stronger than what? Than this, depending on a lot of factors. Something about the chart is what? It contains a lot of conferences to actually what? To actually say these are an A plus or these are an A plus. Different context, different conferences. The market doesn't move in textbook example like this. These are textbook examples. So let's just go on and find some concept of the inducement so we can actually get done with this part of it. Mm. So it is always everywhere in the chat. Always everywhere cat. Okay, let me just the next expectation I'm expecting on BTC. There is an inducement in that setup. So let me just go there. So it is always on your charts. It is always on your charts. So yeah, you have to be sorry for the gibberish on my charts. You won't mind it. You won't mind it. I'm very sorry. But this is it over here. Yeah, this I am mark IND. That's not that is inducement. I just shortened it. But let me delete some cases over here. Let me just I won't want to disrupt my chart, so I will go on to another chart so you can. I think there are things on this chart too. Okay, let me just go here. There's not a lot of stuff over here. Yeah, this what I'm expecting this particular block to actually do the best price. Now, where is my index going to buy? This what? This eye that you see over here is an inducement. That is a particular eye I marked in the previous chart I'm showing you. The previous chart that contained a lot of annotations. This is an engagement. What do you see over here? This is a block over here, a demand block over here. You see this particular eye. That single eye is what? Is a liquidity. That is an internal range liquidity. That is an internal range liquidity. And you see what? A break of structure after makes this what? A valid. And what's punctured that particular break of structure? This particular eye broke what? Broke this particular low. And there is a demand block over here. So this is what? This is an inducement and this is a valid block. And that is why I'm picking what? I'm picking this particular block. Something will happen at that particular block, which is what? A reversal downwards. So I expect the market to actually do what? Come up here, clear this particular eye. After clearing the particular eye as an inducement and what? Add this particular demand block over here. Supply block, sorry, over here and what? And start selling off. That is my next expectation. I've shared it in the community if you are there. So we'll see it already. And that is an inducement. That is an example of an inducement. Also, you can count this eye as an inducement too. You could count this eye as an inducement too. That is also what? That is also valid as an inducement, Doesn't particularly break this low or any low after it, bro, Though not really countable, but that's a liquidity too. Liquidity pockets. You understand them? That's a liquidity pocket too. So one of the things that makes a supply or demand block valid or stronger is when you see a liquidity pocket before that particular demand or supply block. So making that liquidity pocket an inducement, it makes that particular setup stronger. Just like I said, big participants will work once through their position at that particular liquidity pocket, and by filling their position, they want to ride along the next positions over there, which is what clearing that liquidity as a liquidity sweep. I'll explain what liquidity sweep is to you. It will take it out as what? Now, from the concept of liquidity sweep that you understand, what will happen over here? Take this particular eye, take it out as a sweep, and after taking it out, what will happen? Tag into this particular block over here and start selling off. That is a liquidity sweep over here. So liquidity sweep will happen and tag the particular block. But in this context, you call this particular kind of liquidity an inducement because it is inducing what? Is inducing liquidity or engineering liquidity to actually clear that eye and tag into the next block over there to actually sell from or buy from. If there is no particular block over there to actually tag into, that is just an external liquidity, or that is just a liquidity pocket with not being an engagement. This particular eye. Imagine this particular eye over here. This is just an external liquidity. This is just a buy side liquidity. This is not an engagement because there is nothing to tag over here. So if price actually come into it and will start telling up, It is not what this is not an inducement. This is just an external liquidity. But in this context, it is a liquidity bucket, but acting as an inducement because it is fueling price to actually come for this block. An inducement is actually what fueling price to actually come to take it out, take that particular liquidity out for what? Take that particular liquidity out to what? To tag the next block after below or after it, below or over it, depending on what? Depending on your trend. So if you get it by now, so it will fall price after what to come and mitigate the particular block over there. But when it is just an external liquidity, it is not fueling price to actually come into anything. That is just what a liquidity pocket on its own. So let me just find more quick examples. There's always an example. So see this particular setup over here. This is a block over here. What do you see happen? This is an inducement. Yeah, this is over here. That's an inducement. What do you see happen? Price dots. After breaking the structure, price clear that inducement, and after clearing that inducement, tagged into what? Tagged into the demand block over here. And after tagging into that demand block, what do you see happening? Price started going up. So that is an inducement over there. It is what? It fueled price to actually what? To actually come and tag what? Come and tag the demand block over there. So an inducement is fueling price to come and clear it and tag the particular POI as in a demand or what? Supply block. That is what? That is above or beneath it. Above or below it. So, it is always on a chart. So you can always go ahead and find it. Let me just look at one more example. These are choppy charts. So let's see if you can actually get one there. Oh God. Though I use it a lot of time too. So I'm even using it over here in this setup over here. Though that particular setup didn't tag my entry. So you can see a very clean setup also. So this will be the last example. See it over here. A break of structure over here. And after the structure break, what do you see happen? This is a valid block over here. A valid other block that I picked over here. And I can see this out. This is a I over here. This is an inducement. This I is also an inducement. But I won't pick it. Why won't I pick it? Because I see a more valid block over here. And I see I had reasons why price won't just clear this I and what and tap this particular block over here and start reversing. No, I had reasons. So I see this particular block as what a more valid block, and there's an inducement here. But when you understand, all you want to understand is what it's not valid blocks. I think we've talked about valid blocks already. Over here, is what this is not really a valid block. Why is it not a valid block? Because it has what? It has been mitigated once already. Yeah, you can see price mitigated it already over here. That particular sniping to it was mitigated already. Yeah, it has been mitigated already. So I won't count this block as a valid data block anymore. So instead, I won't be counting this I as an inducement to use anymore. I will use what? I will use this inducement. So it will actually induce price to actually come and clear it out and tag into this particular other block over here. And after tagging into it, sell off. So it didn't tag my entry over here, but no, I think it actually tagged the other block over here because it actually wants to count it. The block started somewhere around there. So if you actually see it that way, I could have said it has tagged the entry already. I share this particular setup, it has tagged the entry already. I share this particular setup in the community too. So let me say my entry was a bit too far. So the setup was valid and it is running already, just like you can see it over here. So that is a very valid example, running live. So you can see it's running live and inducement, price tagged into inducement, cleared it and tagged into the block above it. After tagging, snipe entry and started selling off. So it will continue selling off next week again. So, and that's it. A simple concept, and it is very easy to use and makes up a very strong setup. This is a very strong setup for me. So I will even be finding another entry over here and sell off to continue the sell continuation to participate in the sell continuation. So but that is just it. That is just using it live. So that is it.